So now that we've gone through all of the different concepts to the strategy, I think it's important that we actually start putting things together and talk about, the rule-based strategy, the checklist, important notes, and essentially try and keep, our discretion to an absolute minimum, and really be having a rule-based sort of strategy and a checklist for us to be looking at before entering trades. So we're going to go through some of the rules, and we take it from there. Then we get into some examples after. Okay, so we want to be using a higher time frame to identify the overall picture of price and to get our directional bias on the market. Okay, for that time frame for me is the 1 hour time frame. Okay, so what I am looking at in an ideal world is for trending markets and looking to trade long or short from supply and demand continuations, which would be higher lows when looking for longs and lower highs when looking for sells. So this example here, we've had a break of structure, so this would be our order block and our higher low, where we're looking to get long from here. Okay, I will also trade into the higher time frame areas, which we get into in the example on New Zealand yen that I'll be looking at. So what we are looking at from these areas are order blocks. So where is the momentum that came into the market? If we look at this example, we can see the momentum came in on these two candles, which also caused the break of structure above this high. Okay, and then this would be our order block. So our bullish order block, last down close candle. This is where price is likely to be gravitating back to, to fill more orders, rebalance this bit of pricing. And then this is where we're looking for our entries long from here. Okay, so this is very textbook, and it's it's a perfect setup. They won't always be this perfect, but this is like bread and butter. This is what we want to be looking at for continuations. Okay, and as I said here, what caused the break? So you can see that caused the break from this move here. Okay, so this area is important because this is where money previously stepped into the market from larger interests. So this is where price is most likely to come back to and, mitigate before continuing to the upside. Okay, so this is where we want to be looking for our entries. So with this strategy, we won't always need to trade with the trend, but it is something that I do recommend for more of the beginner traders if you're new to sort of smart money concepts or the concepts that we teach in this strategy. Because it does take a good amount of time of hard work on the charts to sort of understand price and what it's doing. So that's why I recommend, if you're a beginner, sort of try and keep with the trend, and as you develop more in your trading journey, trade in this style, then this is when you can start implementing the various different entry types, which would be reversals and unmitigated areas of supply and demand and order blocks. Okay, so the strategy provides a lot of opportunity, as we know, and from what we have learned already is that we can also trade from, as I've just said, unmitigated supply and demand areas, which can be classified as reversals in most scenarios. But in this video, we are going to be focusing solely on continuation trades. So this sort of entry model here. Okay, this is what we mainly teach, as it's very powerful, and we can trade around this. Okay, so what we're going to do now is get into the strategy checklist. Okay, so let's go through it. So although this is my checklist, it may differ for you. Like you could be looking at, say, the 4 hour time frame, refining on the 15 or the 30 minute, and then placing entries on your 1 minute or lower time frames. But this is the checklist, and this is how I'm trading it. And you can change certain things to fit your own style and your own preference. Okay, so this is not concrete, but this is what I'm trading. Okay, this is what I'm going to teach. Okay, so 1 hour time frame for direction and bias. So this is what we're looking at, the 1 hour time frame to get an overall picture of, what order blocks are: lower lows, lower highs, higher highs, and higher lows, and our areas of interest. This is the time frame that we use for that, and this is what this diagram is. Higher time frame perspective. So this is the 1 hour time frame. Okay, so this is higher high. We pull back, we put in a new higher high. This is our new higher low. This is where we want to be looking for entries, and we can trade into this level as well. Okay, so 1 hour supply and demand levels and order blocks. Refine the 1 hour order blocks on the 15-minute time frame only when it is clearly needed. Okay, so what that means is if we have this as an order block, but on the 15-minute it's a really clear sort of push off, clear imbalance, and a candle where we can refine, then that's what I'm going to be doing. And I'm not going to refine lower than that. So I'm not going to be going on to the 5-minute. So I'm refining from the hourly to the 15, and then that's it. Simple as that. Okay, so 1 minute time frame is used for trade execution once price trades into our higher time frame areas. So once price comes in, this is our higher time frame area. This is when I'll be looking to drop down to the 1 minute time frame if I'm not already on that time frame already from trading sells from here. Okay, so once we make this higher high, price retraced, and it's gravitating back into this area, or that's what we're anticipating. It can stop here and push up, and if that's the case, then we'll be looking at this new area and looking to see how price broke that high. Okay, but we can use the lower time frames to get an idea if price is going to continue down and trade that momentum, and also if there's imbalance from this move here and liquidity to target, then that's what we can do. But on the hourly, we can see we had this push down, and we had this little bullish candle push back up, and we also have a wick here. Now on the 1 minute time frame, this would be a push down, a pullback, a break of structure, mitigation, continuation. So we can trade this on that time frame. Okay, and the very first target is going to be obviously this area here, and where this imbalance started from here. Okay, so getting back to this, where was we? Once price trades into the higher time frame areas, okay, I will refine my 1 minute areas on the 30-second or 15-second time frame when it is needed. So if we've got a 1 minute large order block, then I will refine that on a 30-second or 15-second. But it's not that rare, but I will do it from time to time. Okay. So what I've put here, sometimes a 1 minute break of structure is not enough, but it does depend on each different scenario we are faced with. So when it comes to executing, always be asking yourself, what is price telling you? Is there liquidity left to clear? Are we still bearish coming into the bullish order block? Is price still respecting the supply zones on a lower time frame, that is? What are other smart money traders looking at along with retail traders? Has supply failed that created demand, and has demand failed that created supply? So these are the questions that I'm always asking myself when I'm looking at entering trades, and it's important that you do the same. So you can stick to taking high quality trades and sort of filter out the bad ones. Okay. So some important notes here. It's important to note that I will not just wait for price to come into a higher time frame areas, as I've mentioned. As we know, the markets are fractal, and they don't need to respect our higher time frame order blocks or supply and demand levels. We always just have the anticipation that they will. From past data, we can clearly get an edge from these areas, because 7 to 8 times out of 10, they're going to respect, and they're going to, respect them, push off, and, continue. But it's not concrete. It doesn't need to happen. Okay. So with that being said, I will look to take trades coming into the higher time frame areas. I base this off of clear 1 minute order flow, structure breaks, liquidity to target, etc. But obviously what we want to do is be targeting the higher time frame areas and then judge price based off how it is delivered into the areas. So is there momentum coming in, or can we identify price structure and, you know, be looking for the higher time frame areas to be taken over and then look to get long, or is it going to continue based off momentum? Okay, so now that we've gone through all of this, what I want to do now is get straight into a very clean example on New Zealand yen. Okay, so I've got the chart up now, and if I just take price back to around this level here, what you can see is we have the exact same thing as what we were just looking at on the charts. So if I just go back to that, this diagram, you can see we have the higher high, higher low, we broke structure, put in a new higher high, and we have a new higher low. Okay, so you can see if I just zoom right in, this is exactly what we have here. Okay, so if we look at what we had previously, you know, we pushed down with this lower low, we took out that low, and, you know, we took liquidity, we then reversed, broke structure, and we've been bullish ever since. So this is the move that put in a new high above here, and we pulled back, but we didn't quite come into this level. We then pulled back, put in a new higher high, and again we haven't really come back into this level, and instead, you know, we've just been really bullish and continuing. But if we look to see what we have, is we had a high high, we pulled back, we put in a new higher high, so we can identify this as a clear break of structure, which would be a bullish break, as you can see, and price has now come back in. So firstly, what we can do is take this as our hourly order block. Okay, so the reason this is the order block is because we have a pullback, and then this is the move that broke structure. So we broke above this higher high, and the last down close candle is this candle here. So this is our bullish order block, and this is our area of interest. Okay, so if we go to a 15-minute time frame, you can see all of the drawings, so just ignore that for now. But what we can see is, just delete that off. Yeah, so what we can see is we can refine it down on the 15-minute time frame. So the hourly area is obviously, you know, this purple zone, so we can just refine it down a little bit down to that candle, and we could be looking at this as the last down candle. But then, as we've learned already in the order block section, is this candle hasn't engulfed the order block. It was in fact that this candle that actually pushed away, and then, you know, momentum came in, broke structure, okay, which is there. So we can refine it to that candle and look for price to come back in, and then look to get long from here. But in the meantime, what we can do is actually look to see if there's entries coming into the level. So what we can do is just drop down to a 1 minute time frame, and you can see I've put on some drawings already. So I would like to just go through it and, you know, look to see how price is respecting sort of supply zones, and how we can take advantage of, you know, sells before the longer term buy. Okay, so if we just start and hide that for now, we already know the area of interest on the higher time frames is down here, and, you know, from here we're clearly putting in higher highs and higher lows. So if this continues, then we're not going to be looking for sells, because, you know, we're seeing clear bullish order flow to the upside. Okay, but if I just zoom right in, what we can see is we break structure, we have a higher high, higher low, we then break structure, not really showing too much momentum. This could be just seeking liquidity from the lows, tapping into an area, or even, you know, this clear area here, which I can mark on. And that's essentially, you know, price did come down below it, but then we left liquidity, and you can see this move here, we broke that high, we left an unmitigated demand zone, price came down, and granted we have broke structure, but it's always about looking left and looking to see what price tapped into. Okay, so this is more so, you know, a calm sort of break, and is seeking liquidity from these lows here to push higher. And especially once price comes in, we come to wick it, but this really is taking, or, you know, refilling this sort of imbalance candle here, and also taking liquidity from the low, as we know. Okay, so then we push off, ultimately respecting that demand, and what we can see is we have one high and a second high. We have equal highs, so we know there's liquidity above once price pushed off. So really I wouldn't be looking to sell until we sweep this liquidity and potentially even sweep this higher. So what you can see is we range, you know, we all know a range to be, you know, building liquidity and people getting FOMO and, you know, fear of missing out. So what we can see, we then momentously break, sweep liquidity. Okay, so this is textbook. We take liquidity, we then range, we take out the high. So once this high was taken out, it's very likely price is then going to commit down, because we've taken liquidity from the high and from these equal highs. And if we want to be particular, we do have equal highs, 1, 2, even 3. Okay, so we've taken buy side liquidity, and if we get into this bit of pricing here, okay, so I just want to zoom in. This is key. So once we sweep the high, we then push down, and it was this move here that you can see we actually have momentum. And what am I always saying? Well, if we look left, this move here broke demand, which created supply. Okay, so what that basically means is we had this demand zone, price did not respect it, it pushed through, which has also created supply. So this gives it a lot more probability of price coming back into this level. And you can see we did wick above it, but 2.5 pip stop loss. And if I just zoom right in, you could take this whole range or this candle as your area, and then, you know, have your 2 to 3 pip stop loss just above, and, you know, you're good to go. So again, demand was failed, that created supply. Okay, and we do have an area here, but we can clearly see that the move that caused this supply and the break started from up here, and that's where price is likely going to be gravitating to. As you can see, it did, and that's a clear entry that we can take on a 1 minute time frame, and that's the first entry. So we can then see we have this as the lower low, price comes to test it, it pulls off, and then it breaks. Okay, so just zoom right in. Again, we come to wick it, literally by the pip, we pull away, and then we break structure. Okay, so this is somewhat of liquidity, and people are potentially looking to get long from these equal lows here. We pull off, and then we break structure. So this is the move here that's put in a new lower low and broken structure. Okay, so we can be looking at this whole range. So 1, 2, 3 candles, or this last up close candle as our entry. As you can see, we would place there with, you know, 2 pips in this case is above the high, so that's more than enough, and that's the second entry. Okay, now bear in mind all of these trades are in hindsight, but it's, you know, this is why price is coming back into these areas, and, you know, there's a very clear reason why it's doing that. Okay, so if we move on, we can see we put in a lower low and we pull back. So we would have an area here, if that, just move that out of the way. we could have an area on this candle or even this little candle here, which ultimately that's what price respected. But if we move on, we can see we put in a new lower low again, breaking that low, and we have the last up close candle. Price comes back into it, and stop loss 2.5 pips or even 2 pips just above the high, so we're protected. And then we have the exact same thing again. We pull back and we put in a new lower low, breaking this low. Last up close candle, refines at that candle, we tap in, mitigate, and then we continue. Okay, so that's 4 trades that we can take. So and it adds up as well. Look, if we go down to the low, we have lows of 13%, lows of 11, 7, and 7 again. Okay, so it's a lot of percentage, and we haven't even got into the higher time frame areas yet. Okay, well, we have got into the higher time frame areas, but we haven't flipped our bias yet, is what I'm trying to say. So if we just mark on our higher time frame area again, as you can see, we are now trading inside it, but that does not mean that we need to flip our bias right away. We just need to wait for supply to fail. That creates demand. Okay, so if I just now take off these or hide these quickly, just so we don't get confused, just hide that and we can delete that off. Okay, so price is now trading within the higher time frame area, and the most recent area of supply would clearly be this last up close candle and this area here. Okay, so for me to get involved, I want to really see this area be mitigated or sort of breached, like broken above, and look to see how price breaks it. Okay, so if we look to see current price, what we have is a swing point. So we have a lower low and a swing high up here, lower high. All of these breaks of structure within that, they're just sub breaks, and it's not really something that I'm looking to trade, although you can trade it, but you need to test it. For me, I'm just waiting for the clear swing points to be broken. So what we're doing now is we're currently ranging, and what we can see is we do have some equal lows from here. Okay, and price comes down to sweep it. We come into that wick, and surprise, surprise, we just about take out that low. Okay, so it's more confluence that we've taken liquidity from here and that low, and we can now look to see price push higher. Okay, so these order blocks here, as I've mentioned, it's just sort of sub breaks within the swing points. Okay, I'm really looking to see how price reacts to this area here. Okay, so now we've tapped in, and we've mitigated to the 50%. What happens next is really important, and you can see what happens. We break. Okay, so we previously come in to mitigate, we pulled off, and then this is the move here that's actually broken this supply, and it's created demand. Okay, so if I just zoom right in, we can see, just bring that to the front, supply mitigated, pulled off, and then we break and we create demand. Now in this example, we do have a couple areas, just zoom right in, where for me, I'd be looking at this wick, as you can see, or you can take that candle there. For me, the wick would be the extreme, and the candle, this candle here, would be another area where you can be looking to take trades from. And there's not really a right and wrong. I'll delete it off now. So once we got that, and we've clearly broken supply, we have demand. This is good for me to be now looking to set an entry at the top of this sort of wick. And if we look to see here, we do have sub breaks of structure and we do have mitigations. Okay, so it is showing signs that price is ready and can now go to the upside. So we come in, we get tapped in, and then look, clear momentum. So it's not a coincidence. We come in to mitigate, and now price has a clear reason to commit to the upside. Okay, so this is what I talk about when I say wait for lower time frame confirmation. we traded short coming in, and we didn't get FOMO. You know, we expected this sort of range to build liquidity. Liquidity was swept from equal lows, and that low there was taken out. And we waited for supply to fail. That created demand, and you know, we're now seeing higher highs and higher lows. Okay, and then this is, you know, we're putting in a bit of messy price action, but ultimately, you know, we have higher highs and higher lows, and we do have an area within here. So we break structure above that wick, last down close candle, which we do come into, and then we continue. As you can see, we come into it there. We take liquidity from that low as well, and we come a bit lower, but really price doesn't need to come back to our entry. If we go to the 15 or even the hourly, if it's going to load, we can see, look, we come in and these two wicks show us, as we just looked at, the 1 minute breaks of structure, and we do pull back, but you can see, look, price now commits to the upside. And what we want to be looking at as well for a very first target at a minimum is, you know, the hourly higher high. And if I just take it back to once price took that high out, and we go to the 1 minute, if we can find our entry, where is it? Okay, so we go to the 15. Although, you know, it's unlikely you would hold through this pullback, but the very first sort of target is that high, and we're looking at 13-14%, and that's with a 2.2 pip stop loss. Go back to the 1 minute, and that's not taking into consideration the scaling trades. And yeah, so back to the hourly, if we just bring price forward, and you can see we have multiple entries. So we have another one here where, you know, we pushed up. This is the move that broke that high. We pull back and we break structure again. We have this last down close candle. We tap in, and we would have lower time frame entries within this. And the longer this sort of keeps on, you can see the more liquidity that builds, and it's likely price is going to then come back in and take liquidity from all these lows. And what you can see as well is we put in a higher high, we wick the high, taking liquidity, and then we see momentum down, taking liquidity from these areas here. Okay, and this is where price currently is. And if we even look to see what we have here, look, we have the exact same thing. So we have a little consolidation range, we put in a lower low, we break it, we tap back into the order block, refine to that candle, and, you know, lower time frame. A wick on this time frame will show us breaks of structure on a 1 minute time frame, and you can see that price is coming in, and I won't be surprised to see this push up and take out this high.